In this video, we are going to talk about how to come up with a trading plan for yourself, a trading plan that suits you as a trader and as an individual, a trading plan that's geared to your individuality. Sometimes trading plans don't work because they are made for maybe your mentor or another person, and they don't exactly suit you as a trader. So, how do you come up with a trading plan for yourself? A trading plan that is going to work for you. Uh, Grab a pen and a paper, and we are going to be sharing some tips, and you are going to learn one or two things in this video. While you are taking your pen and paper, if you are new on this channel, please consider subscribing so that you don't miss future videos. Like the video. If you don't learn one or two things in this video, at least I hope that I've entertained you a bit. So the least that you can do for me is to just like the video. If you're looking for Forex robots, indicators, books, and stuff like that, there are links in the description box below. Visit those links and see if you cannot download what you are looking for. Everything you can get on this channel is for free, so everything that you're going to download there is for free. Many people also ask me about the broker that I use. See the link in the description box below. Okay. I am hoping that by now you have your pen and paper. So let's talk about how you can make your own trading plan that actually suits you. Okay, so the first thing that you want to look at is your time for trading, time to trade. You can write that down, time to trade. The question that you want to answer is what time best suits your lifestyle when it comes to trading. Are you working? Are you a student? Are you a business person? Or what is it that occupies most of your time during the day or in your life? And having discussed that, what time then best suits your trading? The good thing about trading is there are many trading sessions that are available during the trading day. We have the Asian session, we've got the London session, we've got the New York session, and stuff like that. So you want to decide on a session that best suits your trading, your lifestyle. Because if you are going to be, I don't know the time zone that you are in, you can just look up these trading sessions according to the time zone that you are in. So you find that for some people, probably the New York session is going to happen when they are at work or when they are in class if they are students. So they cannot basically like run away from work or get out of class to trade the New York session. Then for those people, then you need to consider the Asian session and the London session. For some people, the London session happens when they are fast asleep. So the only session that they can catch is probably the New York session and maybe the Asian session. So you need to decide on a time to trade. Of course, Forex is 24 hours a day, 5 days a week, but it does not mean you need to trade the whole 24 hours. Nobody does that. At least most people who are profitable, they don't trade 24 hours a day. Nobody does that. You can only do that with robots and stuff like that, but still, nobody trades 24 hours a day. Okay. So having decided on a session, you just want to look then at does the pair have enough of volume to move the markets. Obviously, you don't want to join a session that rarely moves. Asian session usually comes to mind when talking about sessions that don't actually move. When you are talking about volume and movement, we usually focus on the London session and the New York session. The Asian session does move, but not as much as the London session and not as much as the New York session. So, just to help you decide on the best time for you to be trading. Is that time to trade also influenced by news? Are there going to be any news announcements in that session? There are usually news announcements in all of the sessions. So just bear in mind regarding that if you are going to want to trade the news or if you are going to want to try and avoid the news. Okay. Second part, you want to also look at pairs. After deciding on what the time to trade, then definitely you want to look at what pairs best move in that time that you've decided to trade. Uh, Definitely, the European currencies they move better in the London session. I'm talking about your pound and your euro, and the other pairs, but mostly pound and euro. They like move nicely. You've got a lot of movement on the euro and the pound during London session. Then obviously the dollar dominates the New York session. Then obviously you get the Australian and the Japanese yen kind of dominating the Asian session. So you want to look at pairs. A tip is to what you want to do is to look for a pair that moves in that session and pair it a currency that moves in that session, and you pair it with a currency that is usually dormant in that session. For example, you might want to trade Euro USD because Euro is moving in London session, and whilst USD is waiting for New York session. Or you can say GBP JPY during London session because GBP is the currency of that session, and JPY the yen is the currency of the Asian session. The Asian session is closed, so you are not expecting a lot of movement on the yen. So you are basically pairing a stronger or a currency with some movement versus a currency that's limited on movement because its session is closed. So you are looking for what you want to not do is maybe use like of course you can trade it, but maybe you don't want to use USD card, US dollar versus Canadian, because they are in the same New York session, so they kind of moving along the same. I'm not saying you cannot trade it, you can trade it. But what I'm saying, ideally, what you want to do is you then go for USD versus Japanese yen because you know the Asian session is closed. So there's the yen is kind of there's no movement there. And then in the New York session, you are having volume on the dollar and stuff like that, news on the dollar and stuff like that. Okay. Then you also want to look at correlations. When you're looking at pairs, there are pairs that move the same, there are pairs that move conversely. For example, if you take the dollar index and you compare it with the Euro USD, you find that whatever the dollar index will be doing, you must do the opposite on Euro USD, and you can easily make money. Then you find that usually gold is usually moving around about the same direction with Euro USD. It's not like set in stone. Sometimes they move against, but sometimes they are moving together. So you are looking for correlations because you probably don't want to just trade one pair. Of course, you can make money just trading one pair, but sometimes there's no setups in that pair. Then you just want another pair as a backup. So you are going to look for correlations. Then you are also going to consider spread when you are looking at the pair that you are going to be using. Most of the time, in most brokers, at least with the broker that I use, again, the link is in the description box below. You'll find that USD JPY, Euro USD, I think GBP USD, and a few others, they have very low spread. And I think I've noticed that with many other brokers as well. What usually happens is if a pair has got enough volume, the spreads they go down. But if a pair does not have enough volume, the spread goes up. That's why you find that exotic pairs usually have high spreads because there is not much volume on them. But if you look at the normal pairs, especially the major pairs, they usually have a very low spread because there is too much volume on them. Okay. Then, regarding the pair that you are choosing, you just need also to study it. So if you looked at this pair enough to be able to trade it, just study this pair that you are thinking of trading. Then understand the fundamentals that move the pair that you are choosing to trade. Obviously, Euro USD responds well to FOMC. It responds well to interest rates. It responds well to what is called non-farm payroll. Sorry, I had a blank mind there. NFP, non-farm payrolls, and stuff like that. So if you researched that pair enough, so those are some of the things that you need to consider when you are deciding on a pair that you want to use. Again, if I'm speaking too fast, you feel free to rewind the video and watch this again. Okay. Uh, then we want to look at technical analysis. What are we talking about? Technical analysis. Uh, this pair that you have chosen during the time that you have chosen to trade it, you are going to have to decide on a time frame to trade it. That's where you are going to decide whether you are going to be a swing trader or you are going to be a day trader or scalper. What time frame are you going to be focusing on? Obviously, if you are going to be trading higher time frames, then you are going to be a position trader or you are going to be a swing trader. Again, this is determined by the first question, the time to trade. What time frame to trade best suits you? Okay. Then you are going to have to look for example, I trade zone to zone. You are going to need indicators like that. I don't know if you're going to look for channels. Are you going to look for support and resistance, supply and demand? You're going to look for something during that time frame that you're going to be placing your trades. You're going to also look for enough range because there's just not a reason to trade a pair when there's no enough range. Range, what you mean is between placing your trade and between that pair potentially reaching a point, there must be maybe at least 50 pips so that you can make some money. You don't want to trade maybe you enter a trade and the range is only 5 pips. You are wasting your time because either your stop loss is going to be hit or who wants to trade 5 pips a time. What you want to do is to trade things with enough movement. So 50 pips, at least some range where before between placing your trade and reaching your take profit. Then you're going to look at candles and you're also going to look at where to place stop losses and stuff like that. So that's regarding technical analysis. Then you are going to look also at risk management. It's a good, important part of your trading plan. What is your daily risk? What are you willing to lose per day if things don't go your way? Are you comfortable with that risk? Are you comfortable with that risk? That risk, is it dynamic or is it static? Like, do you change it per day or do you want to keep it constant? How many trades are you going to be taking per day? What is your goal? How much money are you planning to make per day, per trading day, or per trading week, or per trading month? Um, if things don't go your way, how are you going to cut your losses? If things do go your way, how are you going to let your winners run? So that's risk management. It's important, an important element for your trading plan. Then, lastly, an important element for your trading plan is trade management. You need to have an idea of how you are going to manage your trades. If your trades move in your favor, how are you going to move your stop loss to break even so that you protect yourself, you protect the position that you took on that pair? Then, how are you going to handle a loss if prices move in drawdown? And you are going to look at again letting your winners run and cutting your losses early. So that goes into trade management. How are you going to manage the trades that you actually have taken? So we said to start with, to build your own trading plan, decide on a time to trade that suits you, whatever circumstance that you have in your life. You are working, you are running a business, you are a student, or whatever you are doing. Decide on a time to trade. Secondly, we said decide on the pairs to trade, given the time that you have chosen that I want to trade during this session. Now, in that session, look for pairs that move, that have got volume, that you understand, that you like, that you kind of, that have low spread in that session. Then we say, then look at technical analysis. What are you going to be using? The indicators that you're going to be using, the time frames that you're going to be using. We are talking about uh, stop losses. We are talking about the ranges for the trades. That's technical analysis. Then risk management, important. You need to have an idea of how you are going to handle losses, how you are going to limit losses, how many trades are you going to be taking a day, how many losses are you willing to take per day, what's your daily goal in the markets. Trade management, how are you going to actually manage every trade that you are going to take, like moving stop losses to break even, letting your winners run, cutting your losses early, and things like that. With this, you actually come up with a trading plan that suits you as an individual. So coming up with a trading plan shouldn't be something like rocket science, or yeah, you can, anybody can do it. Anybody can do it. You need to trade with a trading plan. If I entertained you for the last couple of minutes, or if you gained some value in this video, please go ahead and like the video. Subscribe if you are not yet subscribed so that you don't miss future videos. Until next time, guys, bye.